Hey folks, hope you all are doing well. I'm Karan Bandal from Economist site, and in this video let's talk about $1 trillion exports from India just for the services sector. If you have been following the economic trajectories of the major economies post the pandemic disruption, the Indian economy stands out as one of the few that appears to have favorable prospects in the medium term at least. A momentous rise in the services exports is at the crux of India's post-pandemic resilience. See, driven by a strong wave of global demand for services, India's services exports rose 27% to over $300 billion last fiscal year. The same year also saw India hit an all-time high in goods exports to achieve a record total exports figure of over $750 billion. Of the two legs on which India's exports have been sprinting for the last 2 years, one has begun to wobble a bit. The goods exports have weakened in the current financial year due to the global demand slowdown, and yet services exports continue to show strength. Services sector is at the heart of India's economy. It makes up 50% of the GDP. As I said, India's services exports continued to show progress by growing at 5.6% in the first half of the current financial year and crossed a $150 billion mark. Driven by the reforms, investment and an abundance of young workforce, India has firmly established itself on the global stage for value addition in services. India caters to the demands of the advanced economies in this space. The country ranks 7th among service providers and commands over 4% market share in global exports. If you look at India's services exports basket, it is dominated by software services, followed by others like business services, transportation, travel, etc. So from a current level of around $350 billion in services exports, how do we take this number close to $1 trillion mark? Well, according to Mr. Neeraj Bansal, there are 3 levers that can be pulled. First, look beyond software services or IT. This is where analyzing the export basket from before comes into the picture. Even though India dominates in software services, a new trend is emerging. India is fast becoming the most preferred location for global shared services that are delivered through the GCCs or Global Capability Centers. The number of GCCs in India is expected to jump over 20% to reach 1900 by 2025. This growth is particularly impressive because already India is home to over 45% of all the GCCs in the world that are outside of the home country of a company. So what exactly do these GCCs do? They offer a wide range of services like consulting, education, advertising, finance, emerging tech, etc., not just software. With the growth in the GCCs, these new sectors should open up for the Indian exports. This expectation is backed by numbers as well. A recent NASSCOM KPMG India report found that about 30% of digital banking products produced globally are developed in GCCs in India. The number of new age GCCs are on the rise in the new domains such as BFSI and engineering R&D. In 2022, value of the financial services exports from India clocked a 43% jump. On top of that, there are estimates that about 50% of GCC workforce in India is in tech-enabled services. All these markers indicate an upward progression in the value chain. The GCC space in India is expected to see a 14% CAGR for the next 6 to 7 years. You can see these non-IT sectors have tremendous potential. With the ongoing improvement in India's infrastructure, ease of doing business and connectivity, the growth in non-IT service lines should sustain. This growing momentum in services, in software and beyond can lift India's services exports to $400 billion in the near term and set a foundation for $1 trillion services exports by 2030. Second lever is market diversification. Since the economic liberalization in the 1990s, India has leveraged one of its core competencies, of skilled English-speaking workforce to seize the surging demand from advanced economies. India saw a precipitous rise in services exports as a result, but now most of India's exports have been concentrated in a few markets. See, the US and EU alone account for about 80% of the total services trade from India. And with the expected slowdown in these advanced economies in the near term, India must consider diversifying away from these traditional markets to keep up the growth in its services trade. Look at Asia. Some of these Asian nations are showing a remarkable surge in the demand for commercial services such as finance, telecommunication, insurance, and pension. India can even look at negotiating the upcoming free trade agreements with these countries to acquire an improved market access for Indian services companies. Third and final lever focuses on the human capital. India has a significant advantage owing to its young, tech-savvy, and a large workforce. India can look to harness this workforce edge, but upskilling is going to be key to maximize this potential. Because the flip side of the workforce equation is the skill deficit problem. India produces around 2.2 million STEM graduates, postgraduates, and PhDs every year, most of them unemployable. We need a sustained investment in the quality of higher education. There is a need to combine the government resources with private sector expertise to shape India's youth for emerging opportunities. In summary, India's total exports have been growing post-pandemic. Of the two components, that is goods and services, services exports are showing promise by growing even when the global demand is weakening. India can get its services exports up to $400 billion by focusing on growth areas, market diversification, and upskilling. As a stretch goal, $1 trillion mark for India's services exports does look achievable. Imagine how India's macro stability will look like if the manufacturing sector is able to match the stellar performance of India's services sector. I hope you found this analysis interesting. I'll speak with you again next week. Until then, take care.